Hey guys, how's it going? It's Marcus Scraper. So why do I invest some of my positions with a certain amount of money, other positions with less money, and even some positions and few with a ton of money? Well, we're going to talk about that in this video. And so I have positions like more conservative positions like a Johnson& Johnson. And these positions though, I do think are going to outperform the market and maybe make like 20% in returns for the year. So let's pretend in terms of an easy round number to use for math purposes that I put 10,000 into this kind of position. So I put 10,000 into a Johnson& Johnson. And so I expect 20%. So that's going to be 2,000 in gains. So this money here is definitely growing. Now, what will I put into a more speculative play? Like maybe it's a Hyliion, or maybe it's a Tellurian, or maybe it's a Crestwood Equity Partners. So in either of these scenarios, I'm putting in less capital. And what proportion may I put into this position? Well, I'm thinking that my 10,000 here would grow by 20%, so that's going to be 2,000. So maybe I put 2,000 here, and I expect that to probably double. So that $2,000 will become $4,000. And so I'm getting a $2,000 gain. The gain I'm expecting on the smaller investment is the exact same gain I'm expecting on my larger investment. So this is something in terms of math, because in terms of if you have 10,000 into your positions normally, you wouldn't want to necessarily put only a few $100s into a speculative position because you won't be gaining so much. You'll be only gaining a few $100 and it might not be worth just the risk that you're putting into. And you also want to think about your position sizes in general, because if you're putting in only a few hundred here and there and you have a lot of capital, if you get one company that happens to 10x, you won't be gaining so much from that position that you put into that, from that from the capital that you put into that company and the research that you put into that in terms of why you invested into it in the first place. So you want to put a sizable amount of money into your positions so that it can actually gain you something that's actually meaningful and sizable. So when you're looking at something like Hyliion, well, in terms of if I look at the technical analysis here for a second, we're not doing too much here. We're just going sideways. It seems like we had a low day today that we ended up closing higher. So that's pretty positive. We're testing this area. We're just kind of trading in this range here. This is not too surprising. We could at some point gap below this at some point if this was to go down, especially if the stock market crashes. But at the moment, this seems pretty positive. The other downside here is that we did go below this candle here. The low here was $16.37. The low today was $16.09. So we have to be aware of that bearish sign that happened here, but we'll see if we end up going lower here. This could be a situation where we do end up going lower. We have a low here, another low here, and we could see a triple bottom over here. So that wouldn't be so surprising. We could have one more dip to the downside, crush the hopes and dreams of everyone. Everyone just gives up on this stock here. And then finally going to the upside. Maybe we even see some actual lower lows here before moving higher, before having a snap up to the upside, leaving all the people that sold the stock in the dust. Well, we can dream at least. We'll see where this actually goes. The main point here, and I digress with Hyliion, and all these stocks actually have some pretty interesting gaps going on here. So we're going to have to talk about these gaps. If we look at Crestwood Equity Partners here, we have this interesting gap right here. We fill the gap here, end up going back down, and then trying to hit this gap again and then failing. And then over here, we went into the gap and then failed again. And the interesting thing here with the consolidation that we see right over here, we see that these couple of candles here go right into the gap. And this is the gap we're talking about right here, right? And then we finally jump over the gap and then retest, and the lows hit right the gap here. And then finally we break out. But the funny thing is, or funny for me at least, where are we right now? The highs right now are just filling this gap over here. So we found another gap to interact with. So that's pretty cool. If we can break out of this, and that's a big if, because maybe we see more consolidation after this gap. But the next gap is up here, right around here. This gap right here. So that will be a next area, and we will get there at some point. I don't know exactly when, and this will be the next area to look for in terms of finding some resistance. But these gaps are magnetic, as we are seeing here. And if we look at Tellurian here, where do I see this stock going? And this is a stock, And these are all companies that are more speculative. These are more of my speculative plays. Speculative for a different reason. I mean, this is a profitable company here. This is speculative because it was a company that people thought was going to go bankrupt in the middle of the worst point of the stock market during the pandemic. Worst point of the stock market, not necessarily the worst point of the pandemic. So if we look back at Tellurian, this had a similar situation. And these two stocks are both in the natural gas industry, actually. So this is a stock that basically it is losing money, basically waiting for a deal. It's been waiting for a deal forever. And after the pandemic, they were like, okay, well, the deal's not going to happen. Boom. Are we going bankrupt now? Now we're having some signals in terms of we're seeing strength in natural gas. We're seeing the demand overseas. We're seeing the demand there. And basically now there's hope that there is a deal that's going to happen at some point and a project that they're going to start working on. And this seems pretty inevitable to me. It's just when. And can they have enough cash to last them until that deal happens? That's the question. So I see that this stock probably will fill this gap sometime. And I think sometime soon, probably. And so, what is this gap exactly? We're looking at a price of around $3. I'm having a hard time getting there. Unfortunately, let's zoom in a little bit. Okay, we are seeing a low here of $3.67. So this is filling the gap. And if we just even get to the gap, we're looking at a high of $3.33. So this is telling me $3 is in the near future. And whether we close this gap or not, which is also in the cards, I think, this is something that where you can think of the upside before seeing some consolidation like we saw over here with Crestwood Equity Partners. It's a little different in terms of the scenario, but we are seeing a lot of momentum and a lot of buying in this company. It could be insiders that are buying. So this is some positive price action, and it's pretty exciting. And the exciting thing here is when I bought in at 80 cents or so, because this went from $7 and dropped all the way to below 70 cents. Pretty ridiculous. And so when I jumped in at 80 cents or so, when I averaged up and I'm at like $1.21 now, the amount of capital that I put in here, it doesn't have to be so much where it could be meaningful if it doubles, if it triples, if it goes 4x, 5x, 6x, and maybe even 7x in terms of where this might go. I'm not going to be selling this stock until it hits maybe around $5 is my first target where I'll start to maybe scale some back and take some profits, but I'm in no rush. I'm in this to just ride this out, gain the potential and the upside and the deals that might go through. And the initial investment that I put in here was very little, and I bought in at a low price, and we're kind of look like we're dodging going bankrupt at the moment, at least, especially if the deal goes through. So if we'll see where this goes, but this is a speculative play, just like Hyliion was a speculative play. They're for different reasons. The other company in a dime and the drop of a hat could be profitable once they get this deal. So we're looking at these companies and how much do I put into these companies? Again, I'm looking at that 10,000 here and that 2,000 over here. And if this doubles, I'll get the $2,000 in return, the same return as I would get over here in this position. Now, what is the one other scenario that I might look at in terms of what is another position here? Like, where would I put more money in? And all of this in terms of how much money you put in your speculative position, how much you put in your kind of conservative plays, and how much you put into your big winners. Depends on your own risk tolerance as individuals, because what my risk tolerance is not the same as yours. We have to ask ourselves and look at our own lives to think of where we are at. Are we single? Are we married? Do we have a girlfriend? Do we have kids? What responsibilities do we have outside of ourselves? Are we getting a house? Am I okay with these speculative investments psychologically? Am I okay with that? Can I sleep at night? Am I getting nervous? What is going on with my mental state? So you have to think about all of these things. And that's why it's so tailored to the individual and what each of our own risk levels are. So we have to analyze these things. Now, for me personally, where I put the most money in is these companies that are actually in between the two. And this is kind of a sweet spot. It has the less downside than a pure speculative play that maybe is pre-revenue and that's just losing money and no end to not losing money unless you get a random deal like Tellurian. This is more of it's a for sure thing that's happening. There's no outside forces that's there. This is a for sure thing. You see that either it could be profitable now if they do some changes and they're just investing in growth, or you see that they're starting to scale and that their revenue is increasing and it's inevitable that they will be profitable. And the best part of this is if the media and others that are looking at this don't see that they will be profitable in the future. Because when you see a company that is just losing money, has debt, it is a bit of fear that actually gets thrown into the picture that makes investors a little bit less rational. And so, for example, Airbnb was a stock that I really wanted to invest in. I'm not invested in Airbnb currently, but for example, Airbnb is losing money. But I also know that if they wanted to, they could scale back their investments, go onto their core and rely on that and be profitable as a company if they really wanted to. But they believe in these growth opportunities that they're investing in and they want to stay ahead and invest as much as possible into all of these different areas. And if you believe in those areas and you believe that they will continue to win, then this is an investment that's pretty interesting because they are getting past this speculative phase and they are going into this more dominant conservative play, but they're still not profitable. But you see the profitability either being inevitable or it being there, but they're just investing so much in their growth potential. And so a Airbnb fits this check mark for me in terms of a company that would put more money than a speculative position and more money than a more conservative play like a Johnson & Johnson. Because this is a company that I see doubling, tripling, quadrupling, if not even 10x in the future, and I put more money into that play. So that's just me in terms of what I would do with my money and in terms of my risk tolerance. And for me, this position here, one example for this is Tesla. I saw that this company was inevitably going to become profitable. It was starting to scale. It was just getting started. And so this was an exciting story. I put more money into this company than either of these two scenarios because I saw that it had limited downside and profitability was starting to happen. And let me know where you guys fit with your risk tolerances because just because I put this much into more conservative plays, this much into speculative plays, maybe if you're younger and you have no kind of obligations, you could potentially put even more into the pure spec plays. It is a very big risk. You could lose all your money, but maybe there's folks out there that have that type of risk tolerance and they're putting a lot less into the conservative plays. I don't really know. I'm not sure if that's a smart decision. That's not what I'm currently doing, but I'm interested to hear in what you guys do. Well, I'm going to end this right here. I hope you guys got some value from this content. And if you haven't already, smash that like button, subscribe to this channel for more content like this, and I'll catch you guys in the next one. And keep in mind that none of this is financial advice. This is just some random guy on YouTube drawing some stick figure lines on a chart talking to you guys.